Stephan, you had better than anticipated earnings. Revenue was in line with what the street had anticipated as well. But you still have an issue with declining top-line numbers. How are you going to boost that?
Yeah, what we saw in principle in Q1 is strong customer growth, strong loan and asset growth, and on the back of that, strong NII development, both in our core customer segments. In that sense, the strategy pays off that we've been doing for quite a while. You can also see that the cost reductions are paying off in terms of net profit, especially in our corporate client segment. In general, the environment is difficult, as it has been for the last 2, 3, 4, 5 years. And looking forward, we don't necessarily expect it to get easier. So the core of the strategy, cutting costs and growing customer base and thereby revenue, is what is the answer to this difficult market environment.
So we just heard from Bloomberg intelligence analyst Jonathan Tice talking about that. You haven't been able to cut costs as quickly as revenues are declining. You don't have a positive jaws ratio, as it's known. Will you have to reduce headcount drastically? I mean, you've got 40,000 employees for the German market.
In general, I think if you look over the previous years, we have cut costs pretty nicely. And we are on our way to get to 6.5 billion in 2020 and below 6.8 this year. So there is indeed quite a bit of cost cutting coming over the years. And we are running a cost reduction and a FTE reduction program, obviously. And there's more to come over the next years, which again contributes to the 6.5 billion goal.
How many employees should Commerzbank have to be competitive in this German market?
That depends a little bit on what you believe is possible in terms of product, customers, and revenue growth. Again, if you want to serve your customers properly, and we are a client-centric model, then you need to make sure that you have a proper presence also on ground to go for the revenues.
I'm sure it depends on your outlook as well. In regards to interest rates, you've got negative rates to contend with. That's a banker's nightmare. How long does that happen? Is this a permanent situation that we're in?
No, I think it has turned from a nightmare to just reality. And if we examine a little bit what the ECB has said about rates going up or down for the upcoming years, I think there is little to no belief that we will see rates rising in the next 2 years at least. Everybody can have a personal view whether it gets then after that, but I don't even believe that one. So what you need to do is set up your business model in such a fashion that you try to compensate for the pressure on revenues, which typically is growth, grabbing market share, winning net new customers, 123,000 by the way in the first quarter, and cutting costs to get to this positive jaw. And if you look at the last 2-3 quarters, I think you can see quite a bit of that going forward the right direction.
So how much more? I mean, are you satisfied? You mentioned 123,000 private customers you added in the quarter, 800 I believe, institutional clients. Is that where you need to be, or does it need to be double or triple that in order to scale up to the right size?
If you look at the German market in general, you can see that a lot of our competitors are closing down branches. The branch closure rate has almost tripled over the last years. So what you need to do is adjust your, let's say, net new customer approach to what is available in a certain sense in the market. Just doubling it is not necessarily the best thing to do. You need to have a good feeling of what is going on in the market and make sure that you can grab your share out of that one.
I spoke to an investor yesterday who said his concern is you just have this massive and expensive infrastructure, this back office that you don't really need. He'd rather see you move all your clients over to Comdirect and deal with them that way. Have you heard that suggestion before?
Not really, to be honest. There is, I think, there's two things which you need to keep in mind. One is Comdirect to a good part is for efficiency reasons running on a Commerzbank platform. And in that sense, that is neither here nor there, whether and where we really deal with the customers. Secondly, the customer types between the two setups are distinctly different. Comdirect is a lot more geared towards the kind of online a brokerage type of customer than Commerz is. We have some customers moving around, but as long as we keep them in the group, I'm happy. A second part, I think if you look at what we have had in the pipeline with Campus 2.0, this is exactly addressing the efficiency of running the IT platform in a closer connection between the business people and the IT people to make sure that we have a better grip and especially a better efficiency on investments going forward.
The bottom line, I think what investors want to know right now is, are you going to go with a strategy where you stand alone, or do you need to to have a merger? Do you need someone like ING or UniCredit to come in and take over?
On a more general remark, I think what has been said about consolidation in Europe, where we have more than 5,000 banks, still holds true, whether some talks are having a positive result or not. So in general, the environment is as it is, and we need to deal with this. So the first answer to that is, as long as you have a proper strategy which addresses the concerns that we all have, that is obviously one of the key ingredients to go forward on a standalone basis. We have been on a standalone basis before these merger talks. We are on a standalone basis right now, and I wouldn't necessarily see why just the fail of a merger attempt is questioning the standalone strategy. Having said that, we all know that there is the discussion about a consolidation in Europe. The general belief is that in-market mergers will probably be easier than cross-border markets, because normally there's more regulators involved. There is, amongst other things, tax and regulation and so on.
Is it too difficult? You spent months looking at the possibility of mergers. I'm sure you've considered the possibility of a cross-border merger as well. Is it still too difficult in Europe to actually execute it?
Let me put it this way, whether it is too difficult or not is something that you will probably need to find out in any specific project if you really would want to. And again, we haven't spent months on the merger talks, it was more weeks. And these weeks showed us that already the in-market piece is not as easy as or not as convincing from a shareholder point of view in a given time period that it would make sense. But again, it's if so and if ever so, more a case-by-case study and not the simple, obvious answer that that is the solution for everything.